Are you a Canadian senior struggling to make ends meet on just your basic old age security and CPP payouts? What if I told you the government has a little-known program that could potentially put over $1,300 per year in extra cash in your pocket by simply checking a box on your tax return? Keep watching because in this video, I'll reveal all the details on how to claim this valuable top-up to your pension income without any extra work required. But first, let me introduce myself. My name is Michael and this is Seniors Money, a YouTube channel dedicated to helping Canadian retirees and near retirees maximize their income, reduce expenses, and make the most of their golden years through smart financial strategies. If you're new here, make sure to subscribe and hit that notification bell so you don't miss any of my weekly money-saving tips and advice. Now let's get into that $1,335 per year cash boost I mentioned. I'm talking about a provision called the Pension Income Credit that allows lower-income Canadian seniors to earn up to $1,335 in additional income each year without having it clawed back from their Guaranteed Income Supplement, or GIS benefits. For those who aren't familiar, the GIS is a monthly non-taxable benefit paid on top of the basic OAS pension to lower-income seniors in Canada. For the 2023 tax year, the maximum GIS amount is $976.08 per month for a single senior, or $1,532.08 per month for a senior couple, both age 65 or over. However, the amount of GIS you actually receive is based on your previous year's income level. The more income you have from sources like investments, pensions, employment, or business, the less GIS you'll get. In fact, for every $1 of outside income above the very low threshold at $19,512 for singles or $25,104 for couples, your GIS payment gets reduced by 50 cents on the dollar up to the maximum cutoff limits. This GIS clawback has been a real penalty on lower-income seniors trying to supplement their retirement income through working part-time, investment earnings, or other income sources. Once their total income exceeds around $40,000 as a single person or $52,000 as a couple, they become ineligible for any GIS benefits whatsoever. The Pension Income Credit Solution. 2 mins. But this is where the Pension Income Credit can provide substantial relief. Introduced back in 2006, this tax credit allows lower-income GIS recipients to earn up to $1,335 per year in additional income without having it count towards the GIS clawback calculation. Essentially, it lets you exclude $1,335 from your total income for the purposes of the GIS calculation only. So you can have $1,335 more in income than normal before your GIS benefits start getting reduced. Here are some of the key details on how this valuable credit works. The $1,335 amount applies for the 2023 tax year. It gets adjusted annually for inflation. You must be eligible for the Guaranteed Income Supplement to qualify for the Pension Income Credit. It can only be claimed against regular income sources like employment, self-employment, business, rental, interest, dividends, and capital gains. It cannot be claimed against income from the OAS pension itself, the Canada/Quebec pension plans, employer pensions, RIFs, or other registered retirement accounts. To claim the credit, you simply need to fill out the pension income section on your annual tax return and enter the $1,335 amount on line 31,400. This $1,335 then gets deducted from your total net income before Service Canada applies the GIS clawback formulas. And for senior couples where both spouses qualify for GIS, each person can claim the full $1,335 pension income credit. So a lower-income couple could potentially earn up to $2,670 per year additional income without any GIS reduction at all. Say you're a single senior collecting the maximum $976.08 per month GIS amount for 2023. Your income for the year was OAS pension, $8,016. CPP, $9,600. Interest from savings, $1,000. Part-time employment, $12,000. That gives you a total income of $30,616. Without the pension income credit, this amount would push you over the $19,512 income threshold for GIS, resulting in a clawback of $5,552, calculated as 50% of the excess $11,104 over the threshold. So your maximum $11,712 annual GIS amount $976.08 x 12 months, gets reduced down to only $6,160 after the clawback. However, by claiming the $1,335 pension income credit on your tax return, you can reduce your total net income to $29,281 for the GIS calculation, $30,616, $1,335 credit. This $29,281 is still above the $19,512 income threshold, but only by $9,769 instead of the original $11,104. So your GIS clawback would only be $4,884, 50% of $9,769, rather than the original $5,552. In the end, you would receive an annual GIS payment of $11,712. $4,884 equals $6,828 with the pension income credit, compared to just $6,160 without it. That's an extra $668 per year or $55 more per month just by claiming this credit. For lower-income senior couples, the impact is even greater since both spouses can claim the $1,335 credit individually. This can make a difference of over $1,300 per year in higher combined GIS benefits. And just last month in May 2024, Service Canada announced an important update to make the pension income credit a permanent fixture going forward. Previously, this $1,335 amount had to be temporarily renewed each year as part of the federal budget. But now the credit has been made automatic and will continue adjusting annually with inflation without needing Parliament's approval. This finally provides welcome certainty for millions of lower-income seniors relying on GIS to make ends meet. According to Service Canada's projections, making the pension income credit permanent will help an estimated 1.7 million GIS recipients keep more of their retirement income over the coming years. It will pay out an additional $1.9 billion in total GIS benefits annually once fully rolled out. To show the real-world impact, let me share a story from James, one of my longtime viewers. Like many seniors, James was hesitant to take on even just a small part-time job out of fear of losing his modest GIS benefits. But after watching one of my previous videos explaining the pension income credit, he decided to claim the $1,335 amount on his tax return for 2022. This allowed him to earn over $13,000 that year from a part-time retail job without any GIS clawback. James wrote in to say, "Thanks to you explaining this credit, I was able to take that part-time job I wanted without being penalized. That extra $1,100 per month income makes such a difference for me at this stage of life. I truly appreciate you taking the time to share tips like this." I get messages like this all the time from viewers who had no idea obscure tax provisions like the pension income credit even existed until watching this channel. And that's why I'm so passionate about making more Canadian seniors aware of programs like this that can significantly improve their financial situation with little effort. So in summary, if you're a lower-income Canadian senior receiving the Guaranteed Income Supplement, make sure to take full advantage of the pension income credit each year. For the 2023 tax season, you can earn up to $1,335 in additional employment income, business income, rental income, investment income, or other regular income sources without having any of it clawed back from your GIS payments. Simply enter the $1,335 amount on line 31,400 when filing your tax return. And if you're part of a couple, your spouse can claim it too for up to $2,670 in total GIS exempt income. It's such an easy way to give your overall retirement income a nice boost. I'll include a link in the description below to the Service Canada page with all the official details on eligibility and how to claim this credit. Let me know in the comments if you have any other questions.